If you're new to trading the markets and don't even know where to start, this could be a great guide for a lot of beginners, because I use bits of this strategy right here, and even though for beginners it's quite easy to understand, it can also be very effective for any trader of any level. Now I'm going to go through a combination of these two free indicators that you can use on TradingView, and you can use it for pretty much any single pair. So the first one, and the most important one that we'll be going through right now, is this machine learning Lorentzian classification indicator. But because this is a machine learning indicator, it looks back on previous data to constantly refine its own results. So we're just going to be looking at the default settings. If you was just going to be using this with the default, how well would it do for you? And obviously you can see right here that the win rate is 71.6% on the 15-minute time frame for Solana. But I'm going to show you with this indicator a way to make sure that we get rid of all of these results that don't actually work, like these ones right here where it's a buy and a sell signal just after each other. Those are not the ones that you want to be following. So you can use a couple different indicators for this strategy, but one of my personal favorites that I've been using just on its own is this Lux Algo fair value gap positioning average. Now, if you don't know what a fair value gap is, it is literally just a fancy term for a price gap or imbalance in the chart. It's just an area where the price moves so quickly that it left behind a gap with very little trading in between. The market didn't spend much time in this zone, and it usually happens during a strong, fast move. What happens with these fair value gaps is that price tends to revisit these gaps. It's as if the market notices that it moved too fast and wants to fill in that area. So it'll come back for that level of liquidity in those zones. And this uses the average of all the fair value gaps to then determine what direction the price is going to be going. So you can see when it's green, it's going on an uptrend. When it's red, it's going on a downtrend. And these two indicators, I believe, are very simple for beginners to follow. That's why I thought we're going to do this video and I'm going to show you the power behind using this, especially if you're learning trading in the beginning. Now, like I said, you can use this strategy with pretty much any pairs. If you're familiar with the channel from the meme coin videos, then you'll be able to find as well on Axiom in the perpetual section that you can actually trade Solana and a lot of these other cryptocurrencies directly on Axiom. You can also get funded accounts for crypto prop firms as well. So once you've practiced this strategy and you know that you've got a decent enough win rate where you're not taking as many losses, then you can also get a funded account directly for crypto with breakout prop right here. You can get up to $100,000 to trade with, and you can keep 90% of all the profits that you make from that funded account. You can find a discount code for this prop firm in the link in our description below. So what I'm going to do is I'm just going to show you the trades that I would have entered into using this strategy, just so you get a better idea of when you should enter in. And I usually use this on the 15-minute chart, or you can do the 30-minute chart because that has a lot more precise results, but just less frequency of trades. Now, the way I work with this strategy is very simple. If the market is in a downtrend, which it currently is at the moment, it's minus 7%, then I would only be entering sell trades with this strategy and be waiting for the machine learning Lorentzian classification indicator, this red icon, to pop up. You're also trading the direction of the trend as well, because if this is in a complete downtrend, if you're seeing a massive red spike down this way, then it gives you a guide that the market is going to carry on coming down slightly. When you're seeing in the market that there's not a clear pattern of a complete downtrend or uptrend and they're sort of fighting against each other, then I usually stay away from that. What helps with the fair value gap position average indicator as well is that you can clearly see when the market's about to turn. So for example, if you got in for a sell trade right here, even though this ended up being a completely profitable trade, if you would have just carried on holding it, you just want to be making sure that you get the profits in. So the minute that you've seen that the market was about to turn into a green, then you would just take your profit. And it's the same for this buy signal right here. Now keep in mind, this is why I'm saying just to always follow the exact market trend at the moment. Now you would have seen on this day that the market was in a complete uptrend. It skyrocketed through the Asian time zone and then in the London session carried on going upwards. So even though, let's say for example, you woke up at around this time right here, and you see that the market is in a complete uptrend, if you had just used a machine learning Lorentzian classification indicator and you just seen the buy signal, you probably thought, oh, I've missed it right now. I've missed this trade setup. I should probably wait for the next setup. But because of the positioning average indicator that you can see, you could always see that the market was completely going upwards. There was no sign of it turning down until it got to this range right here, and then it carried on going upwards. There was no clear red signal until this bit. This day, Wednesday next week, this is a good example of trades to avoid. When the market is sort of fighting between each other, you would have seen right here that the market's going up and down. You've got a couple different signals coming through. What I would have seen at this range right here, the price is quite high with a 96 billion volume at this point. What I'm seeing right here is that the price was struggling to break this zone and it was completely overbought. And you can see from the positioning average indicator, there was pretty much an overall downtrend. Even though it was coming back up slightly, it couldn't break this level of price around this region. And the day previous, it already skyrocketed. So it was completely overbought and was due for a sell-off. So I would have just waited until there was a clearer downtrend, and this actually happened around the New York opening. So keep in mind when markets open as well, so you've got the London time zone, the New York time zone, the Asian time zone. When these markets open, a massive amount of volume will come in as soon as these markets open. So all you would have been waiting for is just for the market to open and a clear indication that it was going to carry on going down. But you can see for these type of trends right here, where the market is completely going in a massive upward trend or a massive downward trend, that with this strategy, it's actually really simple and easy to see. And these are the type of trade setups that you want to be waiting for. You don't want to just be rushing into every single trade with this strategy. Not every single trade will be completely foolproof. Like these ones, for example, right here, it just depends on the day of the market. And that was only on Solana. What it works best for me and what I've personally been trading with is on gold. And you can see how accurate these results are with gold. Right now, gold's in a bit of an uptrend, and it's just called this signal today. And an extra little bit, just for you beginners to understand, what we need to also be looking for is a break of structure. If we look at the previous day, you can see that the price was at its highest at around 3,251. So that is our previous daily high. With this strategy, what I'd now be waiting for, just as an extra bit of confirmation, would be for the price to then break this level, because as soon as it breaks this level, then other traders and other people will be seeing that it is in a clear uptrend and they'll be putting more money in to buy gold. If we zoom out, we can see that the price was struggling to break this level a couple of days prior. But on Monday of last week, there was a massive drop in price. And do you remember I was talking about fair value gaps before, where there's a massive area of price that moved really quickly? You can see on the Monday that as the Asian market opened, the price completely dropped from 3,340, that region, down to 3,252. So it pretty much dropped $100 in price. So this massive region right here is a massive fair value gap, where the price will eventually come back up to then fill. So this is a trade setup that I am looking for right now on gold. And just to give you an idea of how to spot it in conjunction with using these indicators at the same time. Now it is 11 a.m. I believe, from looking at it when the New York market opens and a lot more volume comes in, that this is probably the direction that they're going to try and take the price at the moment. So this video going up today, what I'll do is later on in the day, I record just showing you guys exactly where the price went to and if what I'm saying actually worked or not. Because what could also happen, even though I probably don't see it because the market is in a bit of an uptrend at the moment, what could also happen is that the price was struggling to breach this region at this point as well. The price could come up to this region, could struggle to break this bit of structure, and could come down as well.
3 hours later.
So what happened with this? It didn't manage to get to that daily high. And when you're entering into a trade, use this as a precise guideline, but then go down to the smaller time frames. So it didn't manage to break that daily high. So that told me that obviously we're going to go for a sell trade. And this was just before the New York Open. So when I seen that the price was going in a downtrend, what I'm doing when I'm looking for an entry, I'm just going down into the smaller time frames to get a bit more of a precise entry. And we were going in a more aggressive downtrend than we were seeing previously in these little tiny downtrends here. But overall, you can see it's in a bullish pattern. The fair value gap average indicator started to show us that it is turning downwards more than it was in the past couple hours. So on the 15-minute, it told us to enter at 32.40. Now I found it on the 5-minute and was thinking, right, yeah, this is going to go for a sell trade because it's definitely not beating this price up here, and got in just before the actual announcement was made. Now, when this happens, what you need to do, usually the machine learning Lorentzian classification indicator gives you quite a precise entry. So you're never really in too much of a drawdown. But if you start to see that the market is turning early when you're waiting for your setup, then it could help just to get in just before the machine learning Lorentzian classification gives you that signal. So what happens when you're waiting for your setup? The price is going to come back up slightly at times, just because this is a liquidity sweep. They're trying to get people out of the stop loss. So the people that entered in down here, all the banks and big institutional firms, are all looking to take these people out of the stop loss, drive the price higher, and then put it down in a certain direction. So if you're entering before the setup, then you've got a higher chance of your trade not hitting your stop loss or going into drawdown. So I was looking at the 5 minute with this, and all I was doing was waiting for a turnaround on this fair value gap positioning average indicator around here. And as soon as I started to see that it was turning round, so obviously the price went down to its lowest at 32.17 and the entry was 32.42. When I started seeing that it was turning around, I was looking at the 5 minute, then dropping down to the 1 minute. And I could see at this point around here that we were turning all the way back up. So usually if you're looking for your exit, what I can suggest to you is to go down to the 5 and 1 minute and just wait for the buy signal to come in if you're in a sell trade, and then just wait for the green positioning average indicator to start turning around more fully than it would down here as well. The way you can tell that is just, it's more of a sharp uptrend in this line right here. As you can see down here, it was a bit of a sharp uptrend, but it started leveling off. And down at this point, the price has already dropped around $20, so I'm happy with a really nice trade there. If you use this as a guideline as a beginner, this can really help you get these entries and exits that you're looking for. So I hope this video helps. Please leave a like and subscribe to us for more trading content.